Good morning and welcome to your PLAZM Protocol Health Check for day 203. Today, we're diving deep into a pretty significant price move, and we're going to separate the market noise from what's really happening inside the protocol. But first, we always start with the most critical safety check.
Okay, let's get right to the headline number. On one hand, you see the broader market, represented by ETH, just drifting down a little. On the other, you see PLAZM with a drop of nearly 10%. Understanding the gap between these two bars, well, that's the whole story for today.
But before we even touch that PLAZM price, we always start with the two things that matter most. What's the state of the broader crypto market? And, more importantly, is the protocol's core margin position on Aave safe? First up, the market. Ethereum is trading at 2304, which is down just under 0.7%. So, it's a slight dip, not a major market event.
And this really lines up with the overall market mood. The Fear and Greed Index is sitting at 29, which puts us firmly in fear territory. That's the backdraft for everything today, a very cautious environment.
So, with that context in mind, we can now ask the single most important question for the protocol's stability. Is that Aave position holding up? Is it safe?
And the answer is a very clear yes. The Aave Health Factor is rock solid, holding strong above 2.05. And get this, despite the dip in the market and all that token volatility, this core safety number has barely even budged.
Now, let's be super clear about what this means. A health factor above 2.0 isn't just safe. It's an incredibly stable position. It means the risk of getting liquidated at these price levels is, for all practical purposes, zero. This is the bedrock of the entire system's stability.
All right, so with safety confirmed, we can now turn our full attention back to deconstructing that nearly 10% drop we're seeing in the PLAZM token price.
And this right here is the crucial point. If you take the market's general drift, that negative 0.69%, and you subtract it from PLAZM's big drop, you're left with a gap of about 9%. That 9% is selling pressure that is unique to the PLAZM protocol today.
And this brings us right to the core question of our entire analysis. What's driving this specific sell-off? Is there something broken fundamentally, or is it something else entirely? Well, based on all the data, our core thesis is this. Today's price action seems to be a product of negative sentiment and thin liquidity, all happening within a broader, fearful market. It does not appear to be driven by any kind of structural breakdown inside the protocol itself. And to prove that thesis, we're going to look right past the token price for a moment and examine the actual health of the protocol's economic engine. The on-chain data should tell us the real story. And this table really just illustrates that massive disconnect I was talking about. The Vault's ETH balance, it's stable, over 290 ETH. The number of active bonds is actually growing, up 18 since yesterday. The APR on those bonds is improving, and the daily yield being generated is consistent. The engine itself, it's running smoothly.
In fact, you could say the protocol is actually designed for days exactly like this. That daily yield is used to buy and burn PLAZM. So think about it. A lower PLAZM price means the protocol's burn mechanism actually becomes more powerful, removing more tokens from circulation for every single dollar of yield it spends.
And we can see the long-term effect of that mechanism right here. A full 19% of the total PLAZM supply has already been permanently burned, just completely removed from circulation. That percentage is set to grow, and it's especially true on days with lower prices, like today. Okay, so if it's not a fundamental problem, maybe the selling is coming from a huge unlock of tokens, right? Let's check the forward-looking release schedule to see if there's any structural sell pressure hiding on the horizon. And the radar is completely clear. 0 tokens were released today. The upcoming releases are tiny, and there are absolutely no major unlock cliffs, we're talking spikes of over 100,000 tokens, scheduled for the next 80 days. This basically confirms today's drop was not caused by a supply shock. So, let's bring all of these data points together and land the plane with our final verdict on the health of the PLAZM protocol as of day 203. Here is your summary, plain and simple. The Aave position is safe. The vault is stable in ETH terms. The buy and burn engine is compounding effectively. The yield is consistent. The only red flag is the price action, and all the available data suggests that's being driven by sentiment, not a fundamental failure. The protocol's core is absolutely sound. And for long-term holders, what does this all really mean? It means the protocol is functioning exactly as it was designed to. It's built to weather this kind of early selling and actually use that opportunity to fund its own token burns at cheaper, more advantageous prices.
And finally, just a quick reminder for everyone. This analysis is for educational purposes only. PLAZM is a high-risk experimental protocol. And of course, nothing in this explainer should ever be taken as financial advice. Please, always do your own research.